is run by a bunch of investment bankers, and Morningstar's tools can help make
Welcome at Morningstar. My name is Peter Bailleul, and today I'm talking with Oliver Kettlewel, who is an analyst here at the Pan-European Research Team in the Benelux office. Oliver, welcome.
Thanks, Peter.
In the few days, and certainly the last weeks, we've seen global equity markets running flat, going horizontally. How do you perceive this category with regards to funds?
Yeah, I think we always have interesting debate in the investment community about what's going to drive returns, especially on a global level. And we talk to a lot of fund houses here at Morningstar, and some of which point to China as being the engine of growth for global returns, and some saying no, it's more commodities exposure that they like to tilt towards. So I think the key point coming out from this is that it's best to have diversified exposure. And I think the great thing about this category that we're talking about today, the category you mentioned, global large cap, is that it does have diversified exposure on both a regional and a sector level. So I think that it makes funds from this category great funds to have as a core fund in your investment portfolio.
So what you're saying actually is this category offers you diversification. Diversification is key. Mm-hmm. What about having diversification? Is it still, well, don't you diversify your returns away?
Yeah, that's a good point. I mean, diversification is the key benefit. You get lower risk through lower volatility of returns. But there is a flip side, of course, to this, and that is that you will not get the highs in returns within this category that you might do in some of our other categories in Morningstar. Say, for example, global emerging markets or high-yield bond categories. These categories see very high but volatile returns. So this global large-cap category, while you don't get these highs in returns, you also don't get the lows. And I think the stability in returns is the key point here. The stability in returns makes these funds from this category such ideal funds to have at the core of your portfolio. Yeah.
A core fund meaning having it for a longer time in your portfolio, 3-5 years? What are your thoughts about that?
Having it as a sort of for a longer time horizon, but also having a larger portion of your investment portfolio dedicated to a large cap global fund. I mean, yeah, you can have your sort of emerging market fund, you can have a sector or a theme fund, or even particular stocks which you're interested in, but I think it's best to have a good sort of 60 to 70% of your investment portfolio in a sort of a large cap global stable portfolio fund, and then use a sort of satellite products, satellite funds around that core holding.
What about, for example, the US, which is a large portion in a lot of these global funds? Is that suitable, does that suit a European investor's needs?
Mm-hmm. Yeah, we do have sort of core funds which are sort of based more on a regional level, the US being one example, and particularly for European investors, you and me, we could also go for a Europe fund. But I think, yeah, for me, the key benefit with a global fund is that sometimes you're going to have a particular region which is not doing well. And if you have a global fund, you have a bit of exposure to Asia, a bit to Europe, and a bit to US. So if one of these regions, say for example the US, there are problems, it does go amiss, you're going to have two other parts of your portfolio driving those returns.
So these funds really make the core of your investment?
Yeah, they are a good reason to have as a core of your investment. Yeah.
Okay, thank you very much, Ollie. In the next video, we will talk about 4 of the picks you brought with you in the global equity category. My name is Peter Bailleul for Morningstar. Thank you very much.